The price of the Australian dollar is heavily entwined with the Chinese economy and commodities, but also heavily affected by the US dollar. Now, chart of the day, I look at the technical analysis to see what's happening with the price of the Australian dollar and potentially see where it may be heading next. Hello, I'm Stephen Hode, trader and founder of TheStopHunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. First of all, for those new to Forex, we're looking at the Australian dollar against the US dollar. Now with that, straight onto the weekly line chart, we can see from 2018 down to the early part of about March 2020, the weakness of the Australian dollar US dollar pair. That was, well, I'm speculating here, but probably due to, the Chinese, what you could call them Chinese trade skirmishes between China and the States, and how that would obviously impact Australia as a commodity based country. And then you can see at the start of 2020, March was into spring, when the coronavirus pandemic hit, how the Australian dollar recovered, and that was in part due to US dollar weakness, and that rose up to highs of around 0.79 before once again coming off and heading now down towards that 61.8% Fibonacci line at 0.707, and a further move down and further weakness in the Australian dollar, then you could see 0.658 of that 38.2% line hit next. I always like to see what the US dollar is doing, and what you're looking at now is the dollar index, a weekly chart, and it's a basket of currencies, but it gives you an idea of how strong or weak the US dollar is compared to its peers. And as we can see at the moment, we can see that strength over 2021 picking up, and we can also notice that there's been quite a bit of a range really between 100 and 102 and 89 sort of area over the last few years. You can also see, like we're talking about in the previous chart, the 2018 to 2020 strengthening of the US dollar, which obviously impacted the Australian dollar weakness. But at the moment we can see a strong US dollar, which would have a negative impact on the currency pair. My 4-line break chart here, for those looking to call the turn, get reversals in place, then in the shorter term this is quite a good tool to use, and I use the 4-2 setting, which is 4 line break chart with a 2-bar reversal. So that gives us our first signal at 0.7223. If you want to be more conservative and use a 4-4 setup, then 0.7270 to the upside. So on our daily Heikin-Ashi chart, we can see both the signals at the bottom are bearish and volatility falling down to pretty low numbers, under 5% per annum. And if we head on to the price, I suppose a big takeaway there is we can see the downtrend, but I've drawn on that yellow box area where I think the price has significant action to create sort of support and resistance zones, and we are currently in a sell signal from the 2-line pink box breakout setup, and the trend definitely down. We can also see that pink and blue shaded 2 standard deviation plus minus regression bands, which would give you a number if it kept on going down to the bottom of that at the moment in that sort of angle, 0.7 0.7, somewhere around there. But at the moment, it's currently a bearish outlook. For the Renko chart, I've used a 0.0025 block size. All our signals at the bottom are bearish. We have a sell signal out of the 2-line pink block breakout system, and we are trading underneath the longer term moving average. Now I've used the trend to give us some Fibonacci numbers, and to the downside we've got roughly 0.71 to the next stopping zone, and then under that 0.689 and then 0.676, and to the upside it's got to get to that 61.8% Fibonacci line at 0.746, and then you're looking at 0.766 and up to those highs around 0.8. But all in all, at the moment the Renko in the shorter term holding bearish. I'm giving the Australia dollar bearish outlook at the moment. Now on the top right, if you are more bullish this currency pair and want to look for a reversal point, then there's two numbers, aggressive and conservative, to give you possible entry into that direction. And our Heikin Ashi and Renko chart both pretty much bearish, and if we dig into those signals, targets 3.3, 6.3 to 1 to the upside, and that's only sort of achievable, those numbers, because of a tight stop in there. Similar for the downside in that tight stop, 1.95, 2.87 to 1. But at the moment the technicals all pointing bearish. So there's a lot of issues impacting the Australian dollar at the moment. We have the coronavirus, the strength of the Australian economy, the strength of the US dollar, and the Australians' relationship and business relationship with the Chinese, all factoring into a bearish opinion in today's chart of the day. Do you agree, disagree with the analysis? If you've got any thoughts, comments, ideas where the price of the Australian dollar may be heading next, please let me know in those comments below. Love to hear from you. If you want to learn more about the analysis I've done in the video today, I'll put a link in the description below for you to follow, so you can learn some more there. And if you've liked today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of content I'm going to produce just like this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.